Are resource companies going for cheap? Are we going to see more consolidation in the sector? And where are all these critical minerals going to come from? And what is the most in-demand metal looking ahead? Well, today with Richard Morrow, chairman of the Melbourne Mining Club, we ask some of these questions and more. Richard, how are you?
I'm very good today. I'm looking forward to the Mines and Money Connect in Melbourne. We lost our big conference off to our brothers up there in Sydney, but I'm very excited to be talking to you today, Shae.
I'm thrilled to have you here. And yes, it was an absolute disappointment that we did lose the big conference, but I have no doubt that this Mines and Money Connect Melbourne could challenge the status of the big conference. And what are we going to do in the lead up to this conference is actually talk about some of the investment themes that we're going to see play out in June. Now, first and foremost, I just want to remind everybody that this is not personal investment advice. Now, tell me, a lot of juniors have been starved of capital in the last couple of years. In fact, it was only in 2020 that they did see an influx of capital to keep some of them going. Tell me, now that it's 2023, we've got the pandemic behind us, are juniors still flush with cash or are they struggling to raise a dollar?
Look, there's a wide range there. There's some that are actually swimming in money and they're doing good things with it, and there are others. Their work programs have gone all the way through, and they're coming to the end, and they're looking in the bank account and thinking, "Oh, I better do something about this." And generally speaking, smaller resources companies like to have at least $1 million in their cash balance when they have to report that at the end of every quarter. You know, exploration isn't cheap these days, so they do plough through it. And the idea is that you get out there, you invest that money in the project, achieve some success, report that to your shareholders, and then go back again and say, "Hey, let's keep going with this." Then, shake that begging bowl out there.
Okay, so I guess my follow-up question for this is, over 2022, according to Minex Consulting, around $4 billion was spent on exploration within Australia. Now, that's near the all-time high of $4.5 billion in 2012. Now, this is contrary to what a lot of other people think, I love it when you see explorers spending that money.
Yeah.
Tell me, if they are flush with cash, are explorers inclined to spend money on exploration programs right now, or are they holding on to it?
Yes, they're spending it. In fact, there are quite a few exploration companies over the last year in particular that couldn't get access to either equipment or for drilling or geotech or even the people. A lot of them are just getting access to those facilities and that equipment, and they're out there exploring. In fact, I think you and I were at a lunch today. We heard of one company that's out there exploring in Victoria, and they're starting their program in 2 weeks. Well, I tell you, normally in Victoria, the field season for exploration is well and truly finished by Anzac Day, and we're past that, and these guys haven't even started. So a lot of companies that are cashed up raised that money over the last 6 months, 2 years, and now they're only getting the chance to deploy that, put it into the field, put it in the projects. And I'm like you, I prefer to see that money and as much of it as possible going into the ground and heading for the next discovery.
I guess this is a little bit of a tangent I'm going to take you on right now. You are right. That did come out at lunch today, that there are companies that are just starting to implementing their exploration programs. But what do you think that will mean for news flow for the second half of this year?
Maybe down at, I reckon the quarterly we've just gone through may well have been peak news for the explorers, because so many have got their access to their equipment. They got their access to their ground. I mean, there was a few rain events there late last year and even earlier this quarter that slowed up the exploration programs. What we're also seeing is that often it takes a long time for exploration and assay results to come back from the lab. More capacity is being deployed there. Those turnaround times for assays have come in from, say, 9, 12 weeks into 2 and 3 weeks now, which is fantastic, because there's nothing worse than having to drill blind. Yes, I think there's going to be still an enormous amount of news flow coming through over the rest of the year, maybe just below what we've seen in the quarter just gone. Yeah, there's so much going on out there, and there's so many results that have come in that have caused people to look at things in different ways. The smarter companies tend to look at the results and they come in and go, "Oh, that's not what I expected. Let's just go 100 metres to the left," or something like that, and drill at this angle. I think we're starting to see a lot of that in those areas where in Australia where you can get on the ground, not the wetter parts like in Victoria and, say, Tasmania.
Now, I want to shift this conversation to valuations and I guess consolidation at the same time. Every couple of years this happens, the big guys start gobbling each other up, and normally it trickles down to the small juniors in the market. So obviously more recently we can look to BHP and Oz Minerals, and I believe most recent offer BHP made was $28.25 for shares in Oz Mineral. We've got St Barbara and Genesis merging as well, for example. Are we starting to see this consolidation trend pick up, or are these really just once-offs happening? Or the third part of this question, I guess, very unfairly, is this going to trickle down to the smaller sector like it has in past cycles?
Well, definitely it is. I mean, it all gets down to your cost for finding a ton of base metals, a ton of battery metals, a ton of lithium, an ounce of gold. Is it cheaper to acquire that through your own exploration, or look across the tenement boundary and think, gee, I can buy that guy for $6 an ounce in the ground? And this is where it happens. But this and it's law of the jungle. And it doesn't so much happen here as it happens, say, in the North American market, where a lot of companies there just set themselves up to be taken over upon success, and they're happy to, get a project off the ground, put a few holes in, get a resource up, or even before that, and then pass it on to a bigger company that can really do the hard yards, those deeper holes, the other amount of advanced exploration that's needed. And let's face it, the easy ones have all been found. You do have to spend more to find, and if the share market is too stupid to understand the value inside a small listed company, a cashed up producer, and there's plenty of them out there. I mean, gold is trading at 3,000 Aussie dollars an ounce. Wow. Yeah, you would have knocked my socks off if you said that 10 years ago. That's just fantastic. And maybe it costs $1,000 cash an ounce to pull it out of the ground. That sort of margin can build up a lot of firepower, and a lot of the producers out there, they're very flush with cash. And I was part of a presentation over in Saudi Arabia earlier this year, and I was with a big African explorer, and he was patting himself off the back, says, I've got $300 million in my bank account, no debt. And I thought, well, why don't you get over there and spend it, Really, this is one of the most lucrative times for companies to be in production. And that money burns a hole in the pocket. The smarter ones move first and acquire the better projects. Then there's that fear of missing out. The old FOMO tends to cause a bit of a bubble and a follow through. And it's not as intense as it has been in other cycles. And, with my grey hair, I have seen a few of them. But it's out there and it's just bubbling along. And I know companies keep files on every other company that they'd like to own one. If a price hits a certain level, or maybe they start to run out a bit of money, bang, door flies open, takeover bid happens, and off we go.
I think that leads me to a very interesting next question, and that is valuations. Now, as you just said, gold producers have got more cash in the bank than they know what to do with right now, which is wonderful for a resource company that they've basically turned into cash cows at the moment. Yeah. Are we seeing those, from a valuation point of view, are we seeing explorers going at fire sale prices, or are they a little bit overpriced? And I guess the reason why I bring this up is the mining sector, or mining share values, have been beaten around a little bit lately, in spite of the fact that the big guys are so cashed up and the explorers are doing exactly what they're meant to be doing. So from a shareholder point of view, does this mean that they're going cheap? Or can they get cheaper? Where are we in the share price cycle of these companies?
Well, it's an interesting one. I don't think you can generalise right across the board, but there are certainly pockets of value out there. And I'm yet to see an exploration company CEO that doesn't think their shares are dirt cheap. But that's another matter. If we go back to say, well, any mineral, to be honest with you, not every ounce is the same. An ounce of gold in the ground at a low grade with some metallurgical problems is worth a lot less than high grade quartz vein gold that liberates via gravity. My gut feeling is that the sector is very cheap, and it's globally. You look at some of the copper stocks over there in Canada, in North America, and you think, oh, gee, there's some very big tons in the ground here, and you scratch your head a little bit, given the consensus around the mining industry is that copper is probably the most in-demand metal looking forward, the one they'd all like to have more of in their portfolios.
So, look, I do love to talk about my favorite metals, and one of my favorite metals is copper. However, that's not one of the most, even though it's in the most in demand metal looking forward, the topic of critical metals is actually becoming of increasing importance. Now, from an investment case point of view, I feel investors, this really isn't on their radar right now. So, if you were to put any critical metal from an investor point of view, which one do you think should receive the most attention right now?
Well, that's a tough question there, Shae. Oh dear. Look, I think it's copper.
Oh, interesting.
And a lot of people don't necessarily feel that copper's an LME metal. No, it's not. It's a critical metal. It's actually critical for this decarbonisation, more so even than some of these battery metals that have become a lot easier to find and not so easy to take to the finished product. Copper really jumps off the page. I think graphite also is one that looks interesting. We've got to think about critical metals. It's almost, you don't think mining when you think critical metals. You think geopolitics. You think, what does China and Russia have a lot of to supply to us that we don't have? And then how will the Western politicians, how keen are they to live up to these ideas that they put out there that we're only going to take responsibly sourced metals? We're only going to encourage that. Well, I'm hearing a lot about that, but the enforcement, is not. You're not seeing a lot of that. I mean, the simple answer is you've got to get the metals from where the metals are, and the metals are in the place that not as politically correct to get it from. And maybe we move toward that. It's certainly talking the talk, but it's whether they walk the walk.
You raise an interesting point there, because you look at the Inflation Reduction Act in the US, which basically favours nearshoring or friendshoring, and the recent equivalent act in Europe, which favours critical metals. But you're correct. Not every country hit the geological jackpot. Now, Australia is quite fortunate that we have, so is South Africa. But at the end of the day, a lot of our metals are in places with governments that aren't necessarily friendly to the Western Bloc. Do you think this is going to change, or do you think you're going to see prices react to the control of supply in the marketplace?
It may not be so much an impact on a market price of the commodity, but you may get bigger than we would expect contribution from governments to the development of well-located, shall we say, critical metals that wouldn't necessarily be economic. Or they would never get the funding, and that's another big thing is funding. How do you fund the development of these things? Or how do companies fund the development of these things that look borderline economic, but are they well located? And that's the trade-off at the moment.
Obviously, you and I will both be present at the Mines and Money Connect in Melbourne coming up in June on the 14th and 15th, and we look forward to discussing more of these ideas. But before we wrap up our conversation today, in 60 seconds or less, and I am going to set a timer to this, in 60 seconds, I know, it's going to be a surprise for both of us. In 60 seconds or less, tell me, what is the investment case? Why should shareholders, especially ones that have never considered investing in resources before, why is now the time to consider the resources sector? And I hit start, go.
One of the biggest things there is that lack of capital investment in big projects. There's just hasn't been enough of it. It may not happen this year, it may not happen next year, but the shortages will come for the most in-demand metals. Copper, of course, is a bit of a standout in that department. Yeah, we haven't invested enough for our future. And you can say that across quite a few other non-mining industries. But the lack of investment in new capacity and exploration will cause shortages down the track, push prices up, and make investment in these areas profitable if you pick the right one.
It all comes down to the right one. Perfect. And you did it with 14 seconds to spare.
I could go
Now,
on.
Richard, yeah, oh, look, I agree, actually. And I think you and I will go on when we catch up in June. Richard, I just want to say thank you very much for your time today. I really enjoyed your answers. And I do love that you mentioned responsibly sourced minerals. You are correct. It is a topic that a lot of people are talking about, but nobody's really talked about how we're going to get there and do this.
No, that's right, isn't it, Shae? It's a big question out there. And I think the next 12 months are going to provide that answer.